Hello traders, Vladimir here from Home Trader Club, and in this video, part 2 of the best trading strategies you should consider implementing in 2024. Of course, in any other time as well. We are now in 2024, so it's kind of more relevant. So in today's video, before we actually continue, if you missed the first part, please make sure you watch it as I share their specific strategies, and you can find it right now in the right top corner of this video, the direct link, or below that in the description. I will put it there for you in the description below this video as well. So in today's I will be showing you how I implement trading strategies in double cycles, zigzag setup, and convergences, how I work with that within the double cycles. So let's begin. Before we start, big thanks to Edka Broker for supporting our community and to enjoy all the special offers we have with Edka Broker, including the access to Home Trader Club up to 1 year, including the access to all the trading systems, the SRS, the Forex Triple B, my trading indicators, private mentoring sessions, live trading room projects, anything that you have in your mind, please refer to the link below this video in the description. So the way we will proceed in this video is the same way I shared in the first video, part 1, about the strategies. So what I'll be doing is I'll share with you the original trade as it was published for Home Trader Club members, so you can see all the analysis and the chosen strategy, when, how and why do I choose to pull the trigger or to validate my trade, buy or sell, so you can understand the whole thing. After that, after you see the original video, I'll come back and continue the explanation. Okay, so the first one would be this trade. I am right now in the members area of Home Trader Club, and this is our trading journal. So the first trade, as it was published to the traders of Home Trader Club, was the Aussie Kiwi. That's the first trade I want to present in this video. Aussie Kiwi buy, where our plan was pullbacks and buys towards the 38 and 50% Fibonacci of what you will see in a minute. But this is our trading plan with this invalidation zone for the bullish view in mind. This trade managed to deliver the targets we were looking for, the 38 and the 50% Fibonacci. So what I want you right now is to watch the original video, the explanation, that chosen strategy, how, where, why, and I'll see you right after that. Hey guys, how are you? Bullish idea on the Aussie Kiwi. So as we discussed on live session on Monday, what we follow is the zigzag setup, 2 waves up, 2 waves down, or a range and a breakout. So for those of you who are already involved according to the plan, no need to do anything. For those, we also discussed it here as the main trade we want to see after the news. So we got the break, and the break happening well after the news. So again, for those of you who are already in with the breakout, nothing to do. For those who are not, here is what we have here. On the short term, we have this double cycle in play. Okay, and if we drop that for the levels, so here we are. Okay, I refer to this double cycle. Ideally, we would want it, of course, right next to the 100, but it's within the deviation area, which is fine. And of course, the main part is the strong demand area and the one close to the 105. This is why this one is acceptable. We have a bullish divergence in play, and the recent one on the 4-hour chart gives the classical verification by itself with this divergence. And that's why we were following this zigzag in the breakout. So according to the daily cycle, what we want is the 38.2 zone to be retested, maybe even beyond that, as we have a strong resistance zone there. And that's the trading plan, right? Basically, the trading plan is the ABCD breakout, the range breakout, but the breakout happens in pretty massive way. So any pullback here should be considered as an opportunity to go with the trend. Theoretically, of course, with invalidation is the most recent low. However, we do have here, as you can pay attention to, this zone was holding. This is the key zone, as it was holding for a while. And it's together with this volume profile. So this invalidation area is more than enough from my point of view. So any pullbacks there, and very possibly they will not be significant or big with this momentum, should bring the green light for further continuation. So once again, the 38.2 would be the first target zone. As you can see, this is also right next to the huge daily volume here, as we can see, but also potentially we can see that going to 50% of the Fibonacci, as we have also massive major supply zone here. Okay, so this would be the two target zone in this expected rally. And once again, the most important thing for those who are already involved with the plan discussed on Monday session, nothing to do here, just manage that accordingly. For any questions, I'm there for you in our Telegram group. Good trading. Bye for now. So one of the most powerful things techniques I use, and if you don't know who I am, I'm an internationally certified financial technician. So the technical conditions, and I'm former Nostro trader, all the technical things, the analysis and the implementation to the charts, that's what I do. That's my expertise for more than 15 years now. And one of the most powerful things I know, is the cycles, double cycles. And that's what we were trading in the case of the Aussie Kiwi buy. By the way, inside the Home Trader Club, when you go to our comprehensive media zone, these webinars you'll see here, the courses I teach here are about cycles, divergences, the waves, plus you will have here the courses for beginners and for advanced. So if you are interested in learning all these trading concepts in depth, make sure you check these courses in Home Trader Club. So the double cycle is one of the most important technical things we have, especially when it has the following conditions. So what I want to do is I am taking two waves, okay, here and here. I implement the Fibonacci extension on the first wave and the correction. I see that I am right next to 100% Fibonacci extension with accepted deviation. All that happens to be right here, right on this key demand area, supportive area, you name it. So besides that, what I love to see in my cycles, that's bullish divergence between the lows of the cycle. And as you can see here, the market making lower lows, no problem. The indicator MACD, moving average, making higher lows. And that's also supported by the RSI. At that stage, what I do is I go to the lower time frame to verify my legs. So I can check that the first leg that we saw before is this one. Okay, just I moved it by mistake here. So the first leg was, let's zoom out a little bit, was built here, right, by its own wavings. We got this low, high, and low. While at the end of the second low, we got the trending structure, and we got the ending divergence, bullish divergence by itself, lower lows on the chart versus higher lows on the indicator. Classical condition. And same happens to be at the second leg. So we got here the sequence of the lower highs, lower lows, which also come to the end with a bullish divergence. Again, fantastic condition. That's 2 out of the 3 time frames I work with in that case. Then I am looking for potential entries. And here is the most interesting thing that happened. This is the most recent trend lines of the last daily leg that is built on the 4-hour chart waves. As soon as the last trend line was broken, I'm checking to see how does it form the waves. As you saw on the original video, on the lower time frame or even here, we have a zigzag, which is classical trading entry point. We got 2 waves up, 2 waves down, and the breakout. This breakout also making the trend line breakout. Keep in mind, daily has a double cycle, only the Monday area 4-hour chart has the bullish divergence and the waves and the trend line breakout and the zigzag. That's what I call, bam, classical conditions. According to that, this is the entry point. As you saw in the video, I wanted to see little pullbacks and continuation with this invalidation. The reason is simple. I want in that case to improve the risk reward. Okay, so let's just remove that and plot Fibonacci retracement. And as I explained, I wanted to see 38 up to 50% Fibonacci. These were my targets. Okay, so as soon as we got that, I want the pullback, and then you can see the risk reward in that case would be much improved. Because once we get the pullback, my risk is this, my take profit is much bigger now, 38 and the 50. You can see the price went beyond that, but I cannot know that in advance. So when I set my targets according to the cycle rule, I am checking the Fibonacci retracement levels, and the 50% was also here on the supply. That for me, that is a classical final target. Risk reward is there, technical setup is there, the trading strategy here is based on the double cycle on the daily chart with 4-hour chart breaking the trend line and making the zigzag, classical entry. Let me know if you have any questions about this one below this video in the description. Next trade I want to share with you is the euro dollar. But before that, I would like to ask your support. If you find value in these videos, if you appreciate the explanation, the technical knowledge I share here with you, please hit this like button. Feel free to share this video with anyone who you think can benefit watching this one. And if you are new to our community, please consider to subscribe with the subscribe button below this video in the description. Few words in the comment section would make great help with all the way that our YouTube algorithm works. So thank you very much in advance for your help. So once again, let's go back to the members area. The next trade I want to explain is the euro dollar sell, which delivered this phenomenal move down. So right now I will share with you the original trade as it was published to Home Trader Club members. Watch that, understand the logic, and I'll see you right after that. Hey guys, how are you? Bearish idea on the euro dollar. It's an aggressive and conservative setups will be explained here. So first of all, following the explanation we've had in our live session on Monday, what we follow here is the 3 waves down we have on the euro dollar without any ending conditions, followed by this ABCD. The beautiful part of the ABCD that it reached this supply zone. And this supply zone is based on the lower highs in the downtrend and the higher highs in the uptrend. This area holds so far. Besides that, it rejects the falling resistance line we have, completes a bearish divergence on the histogram, moving average histogram, and the RSI. So why it's aggressive? Because tomorrow we have the CPI data in the US. Yeah, so everything could change after that technically. However, at the moment, conditions are clean and straightforward. So let's talk about the aggressive setup and the conservative setup. The aggressive setup is based on the 1 hour chart. On the 1 hour chart, we also have at the end of the 3 waves, we have a bearish divergence here with the market potentially making convergence. For that, we need the lower lows here. We need the break of the lower lows and the convergence. Okay. Once it completes, we assume that it holds below, then any pullback should give the green light for the sell. Again, it's conservative, it's 1 hour chart, not longer term setup, and it's right before the CPI data to be published tomorrow. So the risk is accordingly. If you decide to participate in such aggressive setup, keep in mind the idea here is small risk, bigger risk reward or bigger reward ratio. And of course, the risk should be minimal accordingly. So this is the aggressive. The conservative would be this low. If the price breaks below this low on a 4 hour chart and makes the lower lows on the histogram, that completes a bearish divergence on a 4 hour chart. And a full setup, which we will get here, right, by making 3 waves down, A, B, C, D, and lower lows on the 4 hour chart. That's a green light for longer term sell the rallies. Also, if that happens to be, we go below the volume profile zone, which is another great strong signal. So that's the conservative and aggressive trades explained. The conservative would be the trigger below this low, lower lows on the chart with an indicators, and then we want to sell the rallies. We want the price to retest the broken low, right, and rising maximum towards the volume profile zone for the sell. Invalidation for both cases would be the current available high. Okay, for me, the invalidation is basically, as I explained many times, if this is the false break with the same size above the recent high. As per the targets, so what we can see here is the expectation of the daily chart forms and completes this move down. Therefore, we would be heading at least towards the previous daily low, and very possibly if we plot Fibonacci extension on these waves, very possibly, of course, this is the first zone, right, around the 61.8, and the possible scenario here is that we will see the euro dollar dropping all the way down to the 100% expansion of these two waves. That's the long-term plan, if the sellers indeed manage to take back the control. Okay, so that's pretty much it. Straightforward, aggressive and conservative plans accordingly. Depends on the plan or the setup you choose to participate, if at all, of course, before the CPI. Just value and use the proper risk. Okay, for any questions, as always, there for you in our Telegram group. Good trading. Bye for now. So, as you saw the original video, the strategy that I worked with in that case is 3 plus 2. The reason I called it 3 plus 2, you can call it whatever you want, is because it is built by 3 waves in a specific given direction that usually do not end with a bearish divergence or signs against. And here we have lower lows on the chart, lower lows on the indicator, no divergences. And then it is going all the way in 2 waves back to the classical level of supply. Why do I love the supply zone? This is where sellers proved their interest. So what happened here is we come to retest the recent low of this downtrend and the previous low of the previous trend, and we're right there. And at the end of these 2 waves, look what happens. Higher highs on the chart, lower highs on the MACD. That's what we call the classical conditions, bearish divergence. If I can prove that on the 1 hour chart I have also flip on the price here, I get myself a phenomenal sell. So I go to the 1 hour chart, and in that case the classical conditions happen to be. The first 4 hour chart leg came to the end with this bearish divergence, higher highs on the chart versus lower highs on the MACD. After that, 2 corrective waves. After that, 3 waves again with a bearish divergence on the 1-hour chart. Higher highs on the chart, lower highs on the MACD. Voila, classical conditions. So that's why for us the break below this low triggers our sell. We are making lower lows on the chart, we are making lower lows on the indicator, and that's the trigger for the sell. This strategy is the convergence strategy. Okay, classical, perfect. You can see also, I don't know if you see that, but you can see here the FB and the false breakout here. This is the indicator, false break and convergence indicator I'm working. One of the best creations I'm proud of that my team did for me. This is super powerful because it actually pinpoints these places where the false break and the convergence happen. The convergence condition, as you saw, it's higher highs on the chart, lower highs on the indicator to make bearish divergence, and then lower lows on the chart and lower lows on the indicator, flipping from negative to positive to lower negative. Sell pullbacks here is an easy decision. As we can see, the euro dollar makes pretty classical pullback and huge drop down, reaching the desired zone we discussed about. The advantage of such strategies is, of course, think about it this way. If you are risking here about 35 pips, you are aiming to about 120 pips. That gives you close to 1 to 4 risk reward. Such trading strategies, when it's a multi-time frame combination, it gives great risk reward. Sometimes it's 1 to 2, sometimes it's 1 to 3, 1 to 4, 1 to 5, but the average is always within the numbers that work for you, numbers that work in your favor. Okay, because once you profit much more, and that's all about the numbers. If you have any questions about this one, let me know in the comment section below this video. And the final trade I want to discuss would be the euro franc. So let's go to the members area. Euro franc. Here, euro franc. Actually, as I record this video, it's beginning of June. This was one of the recent trades, and the reason I love it, and once again I want to remind you guys, you can enjoy all these trading techniques I'm teaching here, and to enjoy from them, not just from the webinars and the courses you can learn from, but in real time. We spot them as they happen. Join us and enjoy these opportunities. So what we have here on the euro franc is a classical combination of a convergence, a cycle, and the waves that are forming the lower lows, lower highs. So once again, I will now pause, not pause actually, but I will now share with you the original video as it was published for our members. Okay, watch that so you understand everything, and I'll see you soon. Hey guys, bearish idea on the euro franc. We discussed about this one in the live session on Monday. Please watch the video if you did not for full analysis. Let's take a look. What do we have here? Why would I expect to see a corrective movement before further bullish continuation? So at the moment we are against the weekly divergence. The last divergence on a weekly chart is bullish. Just move that. The last divergence on the weekly chart is bullish. So for longer run, I would expect to see some sort of ABCD correction. But on a shorter view, we are still in a condition here of falling resistance line on the weekly chart, and on the daily chart, if we drop there and plot Fibonacci extension of the current legs, we will see that we are right on the 61.8. Besides that, we have a beautiful supply zone here. You can see this area was full of sellers. So that's pretty classical condition here for the cycle. Also, if this is 61.8 Fibonacci, right? So if we follow the cycle rules, this one is about 65, 70 candles. the first leg, and the second leg is already about the third, right? So it gives us the ratio of approximately 1 to 2, which is something we want to see in double cycles. We need to drop down to the 4-hour chart to verify the cycle. The first leg of the cycle ends with the bearish divergence, and the last leg of the cycle ends with the bearish divergence as well. Again, classical technical conditions. So right now, what we experienced is lower lows on the chart and lower lows on the indicator, but we don't have the flip from negative to negative, which means we would need to verify the waves on the 1-hour chart. And so far, the waves are pretty great, as is. On the 1-hour chart, we did have the false breakout, and we did have a bearish convergence here. Now it's also the 4-hour chart convergence, right? And the 1-hour chart is making the 3 lower highs, lower lows, no signs against. So for us, what we want to see is pullbacks and bearish continuation. Our trigger zone is going to be, well, this zone of supports, the lows, all these lows are important, up to the supply. So up to this zone. This becomes the classical trigger area. Any pullback towards this zone in one wave or in two waves is a green light for further continuation to the downside. As per the targets we would expect according to the daily cycle, we plot Fibonacci retracement on the double cycle, and the technical target, the ideal target for this cycle is of course the 38.2 Fibonacci. However, because the weekly is bullish, the 38.2, the 23.6 is a very important target by itself. So what we will want to see here is basically the pullback, wrong button, pullback towards the zone and further continuation to the downside. The invalidation is above the most recent high, but technically speaking, this supply zone is the key zone. We don't want to see the price going and rising beyond this level. Okay, so this supply area is the real invalidation zone for this plan. So pay attention to what could happen here, by the way, is some sort of a move down, and a bearish hidden divergence. That also could be a classical sign, right? Or some range or ABCD here towards the trigger zone, and then the continuation. That's what we will want to follow within the cycle and the waves that are currently forming synchronized with the 4-hour and the 1-hour chart. For any questions, as always, I'm there for you in our Telegram group. Wish you good trading. Bye for now. So as you saw, once again, this is all coming from the double cycle. Classical phenomenal conditions. One of my favorite techniques to analyze and to find trading opportunities. And the reason is because when I was a Nostro trader, I saw how all the options come to expire in a very specific place, in a very specific time. And once I left the institutional trading, I started to be a retail trader without being exposed to all the data available for the Nostro traders. So I had to take all the knowledge and to build it on the way I trade. And the cycles is a gift. That's why I use it. That's why I teach it in Home Trader Club. Then what we got here is two waves to the upside, right to 61.8 Fibonacci extension of the first waves. Now, besides that, it came to a classical sell zone. Look how many sellers are here. Buyers are trying, sellers reject. Buyers trying again, sellers reject. Buyers trying again, sellers reject. Then retest. Phenomenal zone. So we got two waves to the upside, to the 61.8, to the supply zone. Bearish divergence on the moving average of the MACD, RSI as well. We go to the lower time frame to find the verification of that cycle. The first leg of the daily time frame ends with the bearish divergence on the 4-hour chart. And what happens next which is also classical condition, is the 4-hour chart completes false breakout, one fake high, second fake high, under bearish divergence conditions, while the market is making its higher highs, indicator lower highs, RSI lower highs. What happens next is the most recent rising trend line is broken and the most recent low is broken. But here is the twist. We want for the convergence lower lows on the chart and the indicator while it flips from negative to positive to negative. Since it didn't make the positive in between the two negatives, we want to verify on the lower time frames that it has the desired waves. And what we saw is 1, 2, 3, while breaking the 4-hour chart low, low and low. And this is why, as soon as it happened, what we wanted to see is the pullback to retest these broken lows. That's what we want. And as soon as that happens to be here, this gives us the aha moment, the green light to go and to actually attack the sell. This is exactly how we worked with this plan, while the logic is simple. As long as this high holds, this is our invalidation, we want to go and to sell. 23.6 is the minimal target, while 38.2 of the 4-hour chart, of the daily chart, would be the target. So if we plot Fibonacci retracement here, you will see, here we are. Both 23.6 and 38.2 were cleaned, and they were cleaned pretty fast. So in that case, once again, the advantage here from your entry zone towards the protection, you would see that the first target gives about 1 to 2, the next target is close to actually 1 to 4 again. So that's the main power of combining cycles with the supply or demand levels, verification on the lower time frame divergences, and convergence or waves. In that case, 3 lower highs, lower lows, the triggers gives us the green light and classical risk reward ratio. If you have any questions, don't hesitate to ask in the comment section. And I want to thank you for watching. I hope you find value in this one as always. And don't hesitate to ask any questions once again. And I want to invite you to our trading family, the Home Trader Club, where you will enjoy full courses, comprehensive media zone, real-time trading education and real-time trading opportunities, access to the community, to myself, my team, and so much more. Join our family with the link below this video in the description. Thanks for watching. Best to you and yours. Good trading. I'll see you soon with more. Bye for now.